Forecasting, forecasting, forecasting. What's going to happen in the next 3, in the next 6, and in the next 12 months as we look forward to say, you know what, I got some pretty cool numbers here from the Bankers Association, the mortgage rate projections, and how is that driving the overall activity? Of course, we have the elections ahead of us. So setting that political environment aside, we're just going to look at the mortgage rate that's controlled by the 10-year Treasury and has a spread on top of that. So the interest rates that I'm going to give you in terms of these projections are for conventional rates. So this is below, in the Bay Area, below $1.1 million loan amount. Anything above $1.1 million loan amount or so, you are getting into the jumbo category. So therefore, that interest rate is actually cheaper. So they're projecting Q4 of 24 to be at 6.46. So I'm going to round it up to 6.5. By Q1, 6.3, by Q2, 6.2, and then by the end of 25 to go down slightly below 6%. That's conventional rates. Now we go into jumbo. Jumbos are about quarter, 2.75 cheaper. So essentially what it's saying, we're going to be at about 5.25 by mid to end of 2025. So what does that mean for buyers? Well, the last time we were at 5 or 5.25, the market was insane. It was a total seller's market, meaning there were more buyers than there were sellers. And that's when the prices do go up. Now, on the flip side, we have an average. Of course, I'm going to share all this data with you. Fannie Mae, MBA, which is Mortgage Banker Association, and NAR, projected that in 2025, that we are going to sell 5.4 million homes. Now, mind you, in the past, well, this year and last year, we sold about 4 million homes. The housing sales, not prices, the sales, we were in recession, meaning we didn't sell, we sold 6 million, we're down to 4 million, 20%, more than 20% lower than that. So we were in recession. So they're saying more and more sellers will actually move in 2025 because they've been holding off for about 2 to 3 to 4 years just because of the rate lock. As the rates drop, we're going to see more sellers. Now, on the flip side, they're also projected this is the amount of homes sold. Now, we'll talk about pricing and how it's going to actually play out. They predicted 2.6% interest rate increase. Now, Goldman Sachs says 4.4 on the high end. Moody's Analytics says a little bit above 1%, 0, which is 0.3%, but it averages out to 2.6. So they're predicting more home sales. They're predicting higher selling price by about 2.6%. Of course, Bay Area always performs much, much higher than this is U.S. numbers. So in terms of what's happening, we see interest rates going down. In fact, Feds did not drop the Fed's rates, but yet the 10-year Treasury saw it forward in anticipation of the Feds dropping, the interest rates dropped. In fact, from 2 months ago, your interest rates was 6.5. Today, you could lock it in at 5.75. So the interest rates are improving. We're seeing more and more applications. We're seeing more buyer entering, but not as many sellers entering, which is the same old story we've had in the Bay Area. It's always about the seller's market. So if you're thinking about moving and you want to plan 1, 2, 3, 6 months ahead, feel free to reach out. Let us guide you through this. I've seen so many scenarios, and my knowledge will be guiding you through this process so I can actually make this process as easy as possible through this transition. Feel free to reach out, 408-515-1613. Bye-bye for now.